What's up, guys? Frugal BC, the crypto markets, and frankly, the stock market too, are crashing, and it has a lot of people in a panic. But I'm going to explain the crashes to you and tell you what you need to do and how to handle it. All that is on today's Frugal BC. What's up, guys? Frugal BC. Hey, we're going through kind of a tough time right now. If you are a crypto investor, you were probably looking at the prices of Bitcoin and Ethereum, and you might be freaking out a little bit. Pretty much everything is down across the board. There's been some exceptions here and there lately, but for the most part, it's just all kind of crashing. Right now, we got Bitcoin around $34,000, which is pretty low, not as low as it got during the May crash, but we might not be done yet. Ethereum is back to around 2,200. I remember that was around 4,000 before, so it's a pretty significant crash. I've seen numbers around 25 to 35% for the whole market. Kind of depends on how you measure it. And the stock market is kind of going the same direction, so it's kind of scary stuff. So I want to talk today, and by the way, I really love it if you subscribe to the channel and hit the like button. Thanks to everyone who's subscribed so far. I'm really impressed by how the channel is growing, and I think subscribing right now is really important because I'm the guy who's going to tell it to you straight. I'm just not. I'm not going to mince words. I find it really frustrating, all the hype machines out there, and I think we've shown that the emperor sometimes doesn't have clothes. Now, I'm a big fan of crypto, but I'm also not blind. I know that these things go up, they go down, and you should be prepared for both. You should be prepared for both. One of the problems is people think about they pump, but they don't think about what they're going to do during the crash. So that's what we're going to talk about today, because we're crashing. First stop, before I get into any of this, is simply don't panic. Don't do anything based on emotions. Think it through first. I saw a meme and I actually shared it. Now that I can make posts on here, I shared it, and it showed two lines, and one said Bitcoin at 68,000, and of course there's all these lines of people waiting to buy it, and then there's another line where Bitcoin was being sold for 34,000, and there's like nobody there. So we all know the principle of buy low, sell high, but the funny thing is that we rarely see that in reality. What most retail investors do is they end up buying when the market is pumping. And a lot of times they're buying close to the top. We saw this in 2018, end of 2017, excuse me. And that was some crazy stuff. I happened to get into crypto in 2017, the summer before it really pumped. And I just thought, yeah, this is probably something I should put a little money into here and there. I didn't take it super seriously, but I thought, yeah, I read some statistics about how much Bitcoin had gone up. So I invested in some Bitcoin, invested in some Ethereum. I think I even had a little Litecoin there for a while. And then it started going up, and I was like, wow, this is really crazy. Well, once I started reading that people were borrowing significant sums of money to put it into Bitcoin, I thought, oh boy, this is going to be bad. Because when you start seeing that kind of behavior, where it's almost you can't believe some of the behavior, it's almost manic. I knew things were going to be going. As soon as it started crashing a little bit, I actually sold out of everything and took profit. I made a pretty decent amount of money, and I never got back in. And then I get back in until last year, 2 years ago, I think. So in a lot of ways, I haven't been in the market that long, but I've been following crypto for much longer. And I think this is illustrative of this concept. So what we see, so why do people do this? Okay, why are we buying when things are going bananas and the prices are at all-time highs? And then why are people tend to sell kind of close to the bottom, it starts crashing? While it's pumping, people get this sense of FOMO, this fear of missing out. So when you see something doing good, you think, oh, I want to get in on that too. Usually by the time you have that feeling, it's too late. And when it's crashing, so like say crypto is doing bad, people think, oh, this is going the wrong direction. I'm scared, I'm pulling out. And so really what you want to do is usually the opposite of that. When people are just selling their houses to buy crypto or stocks or whatever, that's usually not a very good sign. That's a sign that the bubble is coming, because if the institutional people, for one thing, the institutions, they're watching, institutional traders are watching this. So when they see people doing stuff like that, they know the bubble's coming, and that's when they start taking profits, and that's when you get hosed. And vice versa, when the market is tanking, we see that as a sale. So we'll get that in a second. Warren Buffett said, be greedy when others are fearful, be fearful when others are greedy. Now, I've heard that's something of a simplification of what he said, or maybe he was even someone else that said that first. I don't know. That's not really that important. The important point is the message. When others are being greedy, when they're FOMOing in, this is when you want to stop and say, whoa, wait a minute. I think things are getting a little nuts. If a cryptocurrency is at an all-time high, maybe that's when you want to sell out a little bit and take a little profit. Or just don't, go bananas putting money in. Maybe you just stop investing in and you just let it sit. That's a perfectly good strategy too. If I had hung on to my Bitcoin from back then and just slowly dollar cost averaged in, I'd be doing way better than I did. Even though I sold off and I make a lot of profit and I timed the market perfectly, you know what? Because then I wasn't in when I needed to be in. So that's a very important point to keep in mind. Your best bet, especially if you're new to crypto, is like to just dollar cost in and just let it grow, because this stuff is growing over time. If you look at the long picture, it's growing. Okay. So greed and fear. Well, how do we measure this? Well, it turns out we actually have tools to measure this by. There's something called the Fear and Greed Index. It comes from stock originally, but now people have made a Bitcoin version and they measure the market. They measure the crypto market. It'll say fear or greed. And right now we are pretty far into greed, into fear territory. Like something about 13 on a 0 to 100 index. So the higher the better, the higher the more we're closer to greed or not fear, and then the lower, the closer we are to fear. So something that Mr. Money Mustache says that I've always liked, and I think it's a really good way for changing your frameworks around markets. So what he says roughly is that when the market is down, or when the market is going up, great, you're making money. No need to do anything. When the market is going down, awesome, stocks are on sale. So like what this basically says is that no matter what the market is doing, you have a plan for it. So that's why you say, great, if it's going up, you're making money. Okay, cool. You have more money than you did before. You don't really have it until you realize the gains, but we can get into that another day. And when the market is going down, that's like a sale. It's like Macy's 50% off on stocks or crypto. And frankly, that's what we're seeing right now. Now, I'm not telling you what to do. And this is not financial advice, but this is just my strategy and the strategy of people far smarter than me. And what you'll see, this is what the institutional investors do. They don't buy at the top, they buy at the bottom, right? I don't know if this is the bottom. We could go much farther down. I have no idea. But every time it goes down, you're going to have another opportunity to buy at an even lower price. So what do you do with all this? Well, I'd say the question is, first off, to ask you, what are your views on crypto in the long term? And I saw Ben Wilson from the Milky Road email, which is a pretty cool email. You should check it out. He asked, did your feelings on crypto change? Did your views on crypto change, or did just the price change? And I think that's a good question to ask yourself. It's kind of a different way of saying what I'm saying to you now. What do I think? This is the question you ask yourself. What do I think crypto will be in the long term? Do I think it's going to go up over time, over a long period of time, or do I think it's going to go down? That's a much more important question than what is it doing tomorrow, or what is it doing right now? That informs, like, maybe if it goes way down, great, I have an opportunity to buy in at a very low cost. And so I think this is important, why you want to stay away from the hype machines. There's a lot of people, a lot of crypto YouTubers out there that just want to pretend like, oh, this is going to be great, and it's always going to be peaches and roses. Although it's going up, it's going up, it's going up. You don't know. Anyone who tells you that they know, yes, this is going up further right now, and this is going to go up in 6 months or 3 months, or it's going to go down in 3 months, they don't know what they're talking about, because no one does. If they did, they'd be much, much richer than they are. But what a lot of those people actually do, to pay attention to what people do, not what they say. if you watch what these people do, they have a plan for when it goes down and when it goes up. And so you want to have a plan too. Now, like I said, probably one of your best strategies is to simply dollar cost average in. Don't really pay attention to the price, or maybe you just kind of like back off when it's at an all-time high and kind of sit on the sidelines and maybe build up cash a little bit for when you get those dips again, because you will get those dips. That's a perfectly legitimate strategy, and it will do really well for you. Timing the market is much, much better than timing. That's another phrase that goes around. It's true. Because eventually you'll get to take advantage of those dips. 2020, we had a huge dip in the stock market, and I just kept buying in. I didn't change my strategy really. And I made a ton of money just from buying in at some of those really low prices when the market went back up, and it will go back up eventually. And if it doesn't, we have way bigger problems on our hands, because the whole economy will be in big trouble. So just remember to ask yourself that question: what do I think crypto is going to do long term? I personally think crypto is here to stay. I think it's only going to grow. I think the stronger ones like Bitcoin and Ethereum will be around a long time. My feelings on Ethereum. I think there's been a lack of urgency around getting this thing to scale, around the gas fee issues. It's just ridiculous that you pay like $40 to do a $20 transaction. I mean, this is not the promise of crypto. So, but I think it's entrenched enough that it's going to be around for a while at least. I don't know. I might actually get out of Ethereum. We'll see. Another strategy to adopt besides dollar cost averaging in, or the modified version that I just explained, is stuff like DeFi projects. So as you know, I'm in Cake DeFi, I'm in Tinyman, Lofty AI, Yieldy. All these are projects that I believe on. All but Cake DeFi are built on the Algorand blockchain, just because, as you know, Algorand just seems to always work. Have far less problems with all the stuff on Algorand than any other platform. But but I'm not here to show for Algorand. That's just been my experience. But any of these, like Lofty AI, is basically a real estate platform. And it's funny because one of the comments I got in one of my Lofty AI videos is like, "Oh, you only get 6%. You can do better on all this other stuff." Yeah, well, guess what? When other stuff is crashing, I still have like solid returns coming in from Lofty AI because I'm diversifying. So that's another important aspect, really important to diversify. And then beyond DeFi, kind of in that realm is stuff like gaming, like Townstar and Splinterlands, and even I did a little Alchemon on the Algorand blockchain. All these ways are like ways to keep earning while the market is down. Now the assets won't be worth as much, but you're still gaining those coins. And even something like Celsius, where I have my Bitcoin parked, for example, I'm running 6% on my Bitcoin. So I get 6% more Bitcoin every 6% a year, but I'm getting Bitcoin rewards every week that will keep adding to my Bitcoin stash. Even if my Bitcoin goes down, eventually I feel like it's going to go back up again. So these are ways to make money in the market, even when the market is down. So it can't be all returns. So look for stuff like staking. That's a good way to often just make money without really doing much. I don't talk about Cosmos on this channel, and maybe I should probably fix that, but I've been really happy with Cosmos. The price has been really good. It's one of the few that went up recently. It crashed like everything else, but then it went up a little bit. But then I've been getting like 4.6% on it. So that's just a continually influx of new coin that's independent of the price. Now, of course, how much that actual coin is worth changes with the price, but you're adding to your stack even while the price is down. So I think that's a really important aspect to think about. And the last tip I'll give is like sometimes you just gotta kind of forget about it. Don't check CoinMarketCap every day. I know I'm guilty of that, and it's kind of my job to stay on top of it. But also, like, I just go out and have fun with friends. I go fat biking. We're in the middle of Wisconsin, so I go. I've been going snow biking a lot, or skiing, or just hanging out with my friends. So, you can't live and breathe this stuff. At some point, you just kind of have to step away. So I think that's a really good tip, and just something I'm going to put out there, just for your mental well-being is, and I guess the last thing I want to talk about too, which kind of contradicts the thing I just said, was, how permanent is this? I think in 2014 and 2018, we had a crypto winter, and, those are tough to go through. So these are really good times to dollar cost average in, because the price of crypto will drop and you'll have low prices that you'll be able to get into. And remember, those hit 2014 and 2022. So, or excuse me, 2014 and 2018. Well, what's the next logical step? 2022. So we could be in the middle of crypto winter, and it would, if it matches with the stock market, a lot of people are saying that there's a good chance that the stock market is going to be down for a while. The Fed has announced that they're going to be raising interest rates finally after a long time to combat inflation. And I think that's a good thing to do. But now we're talking about 4 or 5 raises throughout the year. And that's, guys, why didn't you start this earlier? We could have done 1% a year the last couple of years, or, you know, whatever increment makes sense. But we could have spread this out, you know, instead of doing this all in 1 year. So now, I don't know what's going to happen with the market. It might be down for a while. If you're working, this is a good time to get in. If you're living off your crypto / stock returns, this probably would have been a good idea probably earlier. You should always have a big cash reserve. I mean, when I go financially independent, when I'm no longer working, I'm going to be having at least 2 years of you know, expenses in cash. So if I don't need to, I'm not going to be touching my capital. That's a really important thing. That way you can take out when it's high and not when it's low. That gives you some flexibility. So anyway, I think I've gone on long enough. Be curious what are you guys feeling right now? What are you thinking? You know, what's going through your mind when you see this stuff? Have you been through this before? You know, if you've been through a Bitcoin crash, remember Bitcoin was not a little more than a year ago, it was well below 34K. That's something important to keep in mind. And ETH was like, God, what was it, like 300 or something? It's easy to get caught up in this and forget that these coins were, these coins right now are still much higher than they were a little more than a year ago. So really important stuff to keep in mind, guys. But stay safe out there, keep your money safe, be optimistic, but also mindful, and we'll see you in the future.